Hello, my name's Mike Struthers. I'm the CEO of Altaley Mining. Altaley is a TSX-V listed company with an operating mine and an advanced construction project in Mexico. Base metals, precious metals space. I joined the company in September last year.
Mike, thank you for the introduction. You've got a glittering career behind you of kind of, or at least a kind of a very practical career around the world. And here you are in Altaley, a small company. I see that you've worked for some big companies in the past. Could you tell me how, just kind of summarize what the main activities of your career and how you ended up in Altaley?
It's always a bit of a challenge to summarize when you start to explain it to people, you realize how long it was, how long it's been. And so to précis that into, a couple of sentences is always interesting. I started out in the Zambian copper belt, actually in 1980. I was a mining geologist originally, quickly moved into rock engineering, which was a sort of specialization of mine, which I then continued with for probably 20 or so years. So I after the Zambian copper belt, I moved to Australia. I was in operations there as well. I worked at the famous Mount Isa field for some years. Ended up by managing an internal group of specialists in rock engineering and blasting and various other technical disciplines. Yes, I've had a principally technical and operations career. After a spell in Australia, I was in Australia for 10 years. I moved to London, opened an office for a consulting firm there that I was working with. Ran that for a while. I was consulting internationally, initially in a niche area, as I said, rock engineering, but that just over time progressively got more and more involved in broader engineering studies, feasibility studies, etc. Had an interesting spell for 2 or 3 years in Russia. I was involved in a joint venture on a very large zinc asset in southern Siberia. That naturally generated a lot of stories. But it turned out that joint venture was in fact with the Lundin Mining Group, and that's where I got to know the Lundin guys. Lundin unfortunately caught a cold on that joint venture and withdrew, but reached out to me a while afterwards and said, look, we need some help in our operations in Portugal. Come and join us. And that's what I did. So then I was based in Portugal for about four or so years at the Neves Corvo operations in the south of the country.
And that was about 12 years ago?
That was about 12 years ago, that's right, when I moved over to Portugal. And my responsibility there was to run some studies and engineering and construction as well to expand the Neves Corvo zinc business. At the time, they were doing about 2.5 million tons a year of copper, but only about 1 million tons a year of zinc. So we progressively improved that over a couple of stages. We raised it up to about 2.5 million tons a year of zinc as well. So in 2014, Lundin acquired the Candelaria field in Chile, and so shortly after that, I got involved in a similar sort of capital projects brief with Lundin over in Chile. Again, expanding plants, expanding the underground mines there, and a variety of other studies. Yeah,
that's a coastal IOCG, iron oxide, copper, gold, isn't it? Kind of.
It's not too far from the coast. Yeah, it's about an hour from the coast. But yeah, a fascinating field. Lots of artisanal mining around the district. Long history of mining. Variety of underground. And obviously one very large open pit operation at Candelaria itself. But we were also looking at opportunities up in the high Andes for other assets that we may acquire and utilize the infrastructure that Candelaria had, which was extensive. So that was a very interesting dimension to some of those studies. No, I did that for a few years as well, and a variety of, as I say, a variety of projects, tailings expansions and mines and etc. So a lot of that part of my career is capital projects, particularly brownfield expansionary work at existing operations. At the end of 2017, I took the bold leap into the juniors market, and so I was initially COO and became CEO of a group listed in London on AIM called Empire Metals. It was Georgian Mining Corporation, because the company held some advanced and early stage exploration targets in Georgia and Eastern Europe. Regrettably, I spent a couple of years in that role fighting the Georgian government and permits and all that sort of thing, and some slightly complex relationships with Russian joint venture partners who were 50-50. Having done a 50-50 JV in Russia with the Lundin Group, I said I'd never do it again, and then lo and behold, I got involved in Georgia and did it again. But anyway, so that was an interesting experience, trying to solve those sorts of political problems. I found myself for the first time operating at sort of ministerial level and trying to unwrap this. Lots to do with embassy, British and American embassy staff, and all of that. So it became an interesting departure from my otherwise technical operating sort of capital projects career. Eventually, we extracted ourselves from that, and the focus of Empire became gold projects in Australia. So about 18 months or so ago, I stepped away from that company. I joined Candelaria Mining, not the same Candelaria, but a different one. This Candelaria Mining is TSX-V listed junior. I was the CEO of Candelaria. Indeed, I effectively I still am, but that's another story, and it doesn't take any of my time really. But Candelaria also has assets in Mexico, so that was my first introduction to the gold and exploration sector in Mexico. So I've been involved in Mexico for just over a couple of years now. Now, so Altaley, really first met the Altaley guys about 18 months ago when Candelaria Company and Altaley just started some very preliminary discussions together, the two groups looking for synergies. There were some common shareholders and what have you. There were some connections between us already. So we went through some discussions at the time, exploring ways we may be able to cooperate, merge, do something like that together. In the end, we didn't take that any further at the time, but it was an introduction to some of the people involved, and reaching the conclusion then. So, as I say, I joined Altaley in September. Altaley didn't have an exemplary year last year.
It's a shocker, but just the share price for the last 18 months is not something you'd want to ski down.
No, indeed. And so, I mean, obviously, having had some of those preliminary discussions, a year prior or whatever, I had some understanding of the assets and the people involved. But they, having established relationships, they reached out and said, look, irrespective of those earlier discussions between the groups, which really, as I say, didn't really go anywhere, we need some help. And long story short, I decided I would join in September and try to help.
What was your brief when you joined?
Turn it around.
So you've got two operations. You've got Campo Morado,
yes,
and you've got
Tahuehueto.
Tahuehueto. And Tahuehueto is in. There was a pre-feasibility study that was completed in April last year, and then kind of straight into construction.
Yes, more or less. Yes. Mm-hmm, mm-hmm.
So when you joined, things had kind of. How far down the construction route was Tahuehueto?
Well, despite some of the press releases earlier, which had given impressions that I think some of the press releases the company had issued, during the course of last year, suggested that Tahuehueto had been had been constructed or was 90% complete probably for the prior 9 months, but never seemed to get beyond 90%. Construction had actually started sometime before that PFS update. The original PFS for Tahuehueto was back in 2018, I believe. So April last year, the company issued an update, but construction was already advanced. In fact, indeed, I think some prior press releases, perhaps in 2021, suggested that the project would be operating at 1,000 tons a day a year ago last January. So, therein for Tahuehueto and the performance last year, therein lies the rub. Really, that was the problem. Is a succession of advisories, if you like, that had suggested that the company was about to deliver the project. So a lot of raised expectations, but unfortunately a failure to deliver on those repeatedly, unfortunately.
So where has it got to now? What's the stage of the asset or the kind of the development?
So Tahuehueto, there's two stages, and I think this also, in my view, when I joined, I felt there was some confusion there, both internally and externally, I would say. There's two stages effectively, a 500 ton a day base case, if you like, and then 1,000 ton a day expansion. And really, it's simplistically put that way because you have one ball mill to do 500, and then you need another one to do 1,000, and that was a sort of a simple partition. But I found that there was in a sense, there was a tendency they were trying to do both at the same time in a way. I didn't feel that there was enough separation or clarity between those two stages. When I arrived, the first ball mill was installed and indeed virtually and almost operating. There was some final things to be done on the crusher, the feed circuit, the crushing and conveyors and what have you, but the mill was sort of ready to go, the first mill. So I said, look, what we need to do here is to finish that stage. So the first goal is to deliver the 500-ton project, get that all working properly. So we set aside, in a sense, the 1,000-ton expansion as a stage 2. So the 500-ton project now is about 85% complete. The two key items remaining to finish that off, well, let me say 3. Perhaps I should say 3. Is some final cyclones and pumps and what have you that will increase the comminution circuit capacity from what is installed at the moment at 350 tons a day to achieve the 500 ton a day designed capacity. So there's some additional work to do in the comminution circuit. Some of that equipment is already on order, in fact, so that's not far off. The second major item is construction of the tailings facility, the definitive tailings facility. That was suspended for a significant period last year due to an unusually heavy rainy season. But we also, again, since I got involved, we've also changed the design slightly to break it into a couple of stages. A slight increase in cost in doing that, but the benefit of being able to place tailings in there in a stage 1 part of it at an earlier stage.
So you increase your capex a small amount, but for operating flexibility and lower operating costs going forward. Yes,
but with that ability to be able to use it earlier. Yeah, it's a dry stack facility, so you can do those things with a relative amount of ease. We're just now going through the final discussions with the tailings consultants in the schedule and budget of that revision, if you like, that amendment to the design. Just about to finalise that and get moving again. And the third, in terms of cost, the third sort of big ticket item there is a second tailings filter press. I only mention that because it's a reasonably large, capital item. It's in the order of about $600,000 or $700,000 to put one in. That's a backup. We've already got one operating, but it's a backup facility to allow us to, sustain 500 ton a day operations. So the goal is get the 500 ton a day project delivered, and we're going to do that in Q2.
How much money do you need for that, and how much money do you have, and how much income do you have?
So the capital cost to finish off the 500 ton project is in the range of about 4.5 to 5 US. So convert that to Canadian, if you will. But it's of that order. Current cash fluctuates quite a bit. We're sitting at just under a couple of million at the moment. But obviously we're producers, so that fluctuates significantly. We'll come on to talk about Campo Morado in a minute, but Tahuehueto itself is also in pre-production. We're averaging about 300 tons a day there at the moment, and getting some reasonable revenues. We tend to, at that level, we get about $350,000 to $400,000 a week in revenue from Tahuehueto. Campo Morado, right now we're doing something like $1 to $1.3 million a week in revenue, and that's going to improve in Q2 and in the second half of the year still further. So we'll talk about Campo in a moment, but in terms of funding the 500 delivery for Tahuehueto, we also announced a little while back a rights offering. The goal of that was to complete that project. The quantum of that rights offering was 16 Canadian. We haven't started that process yet. We've announced it, but it was prior to a consolidation. We'll have to revisit the pricing of it. But the goal basically is to get the company funded and then deliver. So, unfortunately, one of the things that, one of the features of the performance last year, and what I would say is a sort of a loss of credibility in the market for the company, is a number of funding rounds last year. I think there were 3, if I recall correctly. And each time, of course, the message was, this is enough to get it built. And then the company went back to the market, do it again. And you just, you do that once, you might get away with it, but do it 2 or 3 times and you really don't have you lose your credibility. So a big part of what I've got to do this year now is to build some credibility again, which means doing what we say we're going to do, delivery, et cetera, right? That's how we're going to turn this around.
Well, I think your track record, your operating background, the fact that you're a geologist with rock engineering, with a kind of economic studies, with a kind of implementation and delivery background, all of those kind of key stages in your career should give you the ability to. Effectively, what you're doing is ripping off the plaster.
Yes.
And saying, let's heal this, and we need to. Make it work.
And obviously, as I mentioned in an earlier press release, I naturally, when I came in, I spent the last 3 or 4 months, basically the last 3 months, I suppose, digging into the weeds, as I describe it. You're just getting into all the nitty-gritty of the company and where things are at, and across the board, by functional discipline, organisation, Tahuehueto project budgets and schedules, Campo Morado mine plans, history. I'd like to talk about Campo Morado because last year was also, first half of last year wasn't good either. Second half improved, progressively improved, and I'm confident we're going to have a good year at Campo this year. 2021 was a very good year for Campo Morado. I think the company generated something like $26 million of cash in 2021.
Right.
But anyway, it's been a process of understanding where everything is at and where there are shortcomings, why, and how do we address those. And we've started taking some steps now. So
the pre-feasibility study update from April last year, if you look at the recommendations, it's about doing some extra metallurgical test on the Cinco vein and doing some exploration to kind of grow out your resource base. But I didn't feel it was really kind of addressing the elephant in the room, which is kind of the operational and the strategy. You're taking a very it's kind of a pragmatic approach to kind of sorting out the process and the delivery. Does the asset behind it have the capacity for you to run that 500 ton per day project without too much development cost, without too kind of long haulage distances? You know, what's the state of the asset behind the operation?
Yeah, it's good. I mean, that's obviously one of the reasons why I decided to get involved. But for one thing, there's a lot of upside there. I mean, when you visit the property, in fact, you'll see some of the photographs that are available. You'll see this, and the updated presentation that will go on. If it's not on the website already, it'll be there just now. But there's a view of the hillside, effectively the mountain slope. You know. When you stand there, you can see the veins are outcropping. A lot of the veins are outcropping, and you can trace them up the hillside. The initial mining area is a relatively small part of the overall. It's certainly a very small part of the overall concession area, but you can see it's a small part of the vein swarms that are all there, and really only exploiting 2 or 3 of those veins, whereas there are a multitude of them. So and the company Altaley has never done any exploration. There hasn't been any serious exploration done at Tahuehueto since 2011 or something. So in that sense, lots of upside, which just hasn't been exploited. Yeah, look, otherwise, I mean, the asset's good. At 500 ton a day, we could operate it at that level, obviously. That at 500 ton a day, it's operationally cash positive. But there is some overhead there which needs to be managed. There's some debt burden which is well known, which we also are managing, and to be able to carry that overhead and be profitable, we want to get the operation up to 1,000 tons. That's its nameplate capacity. That was the basis of the PFS. It's important to get up to that level. Now, to your point, up at that, operating at that level, when I got stuck into the sort of detail of that project with the team at site, it became evident, for example, that within the mine there would be some congestion issues operating at that level. So within the scope now of the 1,000 ton project is. I mean, it's not a big thing, but it's basically a sort of debottlenecking ore pass and some associated access development to alleviate, trucking congestion and things, which we anticipated when we started working through the details. So, and really, the project is designed to operate at 1,000 tons a day for over 10 years. The life of mine is 10 and a half years, I believe. So, and that doesn't include all the upside from all that resource exploration potential that we have. So it's robust. It's just a matter of getting it operating at the level that it should be. I think there's scope as well. Clearly, there is scope to expand beyond the 1,000 tons a day. I wouldn't want to go too far. There's been no study work done on an expansion beyond 1,000. So I've got no basis. It's just a judgment. But I think you can certainly take it to 1,500 tons a day. Whether you could take it further than that, well, that just requires some study. But at the end of the day, it's a matter of how many working faces have you got to provide to feed the mill. And
the rights raise you want to do, the $60 million offering that you mentioned, is that is that enough capital for you to do that? Get the second ball mill in effectively? No.
A significant part, well, just talking about the rights offering, so there's a 10 million Canadian proportion of that which is guaranteed, and the company has already received a significant amount of that as an advance, so to speak, to continue with construction. So that funding, that quantum of funding allows us to deliver that 500 ton project. delivery of the 1,000 then depends on various factors, most of which would be how do we go in the rights offering, how much take up do we get, and of course our cash forecasting. So in a sense, we can look at the 1,000 ton as a package that we can move in time depending on some of these variables and market conditions and blah, 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 right? So we've been a bit conservative in our metal pricing. Metal prices are actually doing fairly well, holding quite well. So there's various factors to consider as to when we would implement that 1,000 ton project. Naturally, we would like to get it done earlier rather than later. What I can say is that we will get it done by the end of the year. But if we can get it done earlier than that, then we'll see how these other factors play out. But first thing is get that 500 ton finished.
When you're on development, what's your dollar rock you're talking about kind of recovered? Do you work on an NSR basis for your your mine blocks?
We do. Can I quote those off the top of my head? Well, to give you an idea, as I say, we're doing about 300 tons a day at the moment, and that generates about $350,000 to $400,000 a revenue a week.
Okay, so yeah, gotcha.
So what does that make?
$100 something.
$110 rock, something like that.
Yeah, 110. Yeah. And your underground operating costs, or your total cost per ton, is it quite tight? In terms of your margin at the moment?
Right now, it would be tight because it's still developing as an operation, right? We're growing out the organisation. We've got two sets of activities: construction and tree production going on at the same time. I think on a sort of unit cost basis, the cost would be high at the moment. Not what we would expect them to be once things are A, completed, and B, stabilized. So off the top of my head, I forget what the numbers are in the PFS for the sort of total operating unit cost, but I know that later this year, once we've got the 1,000 ton done, I think we're in the range of about $90 a ton or something as we start to stabilize after that. But obviously in 2024, we would be operating at the PFS sort of total OPEX figures, really.
And your mine width, kind of average mine width.
Yeah, it varies quite a bit actually. Some of the veins some of the veins go down to about 1.5 meters wide, but we're operating in one at the moment that's nearly 15 meters wide. So quite variable. I'm sure this figure's in the PFS, but I would guess I think the average is probably about 3 to 4 meters wide, something like that. At the moment, we're operating.
How do you mine the very narrow stuff?
Well, at the moment we're using cut and fill. The sort of pre-production period is using cut and fill. The PFS had a small amount of cut and fill in there, but was basically predicated on long holing operation. In practical terms, you're probably always going to have a mix of the two. At the moment, on the small scale we're operating, we're just using cut and fill. Obviously, that allows us to be particularly selective, keep dilution down to a minimum. We're using, as I say, it's dry stack tails, and we're using the tailings in the mining process, obviously, as a backfill. Currently cut and fill, but you'll see if you refer to the PFS, you'll see the long hole layouts and what have you, which is the bulk of the mining operation is intended to be long hole. Not large long holes, long narrow benches, but we do get some economies of scale there, of course. So that's the direction we'll be heading. We'll head in that direction once we've got everything else sorted out.
Good. Let's move on to Campo Morado.
Okay. Mm-hmm.
Can you give me kind of a status up there? To me, it seems as if it's kind of a metallurgical challenge, perhaps more than anything. But perhaps I'm reading things wrong.
No, not at all. You hit the nail on the head. I wouldn't say challenged. Campo is all right. It's VMS, okay. It's one of those. It's one of those mines that's always going to require more than your average amount of technical management. It just requires that extra level of technical input. On a routine operating basis, more than your average mine, if I can be clumsy like that. And there are really two parts, because it's a VMS deposit, there are fundamentally two parts to the operation. There's the base metal side of the operation. Through flotation, our recoveries of the precious metals are pretty low. I think our gold recoveries are only about 15% or so, 15 to 20%, and silver's not much better, 25 to 30 or something. The precious metals are refractory, and so from a recoveries point of view, there are two parts to it. There's the base metal concentrator, and then there's this opportunity to improve precious metal recoveries in the future through application of different technologies.
Yep.
So I'll talk to both of those. What happened last year at Campo Morado, in my view, is illustrative of recent experience at the operation, which is that it's tended to have been more reactive than it has been proactive. And what I mean by that is, and I'll tell the story of what happened last year as an illustration. So in 2021, as I said, they'd had a very good year. They'd been mining in a high-grade zinc ore body. They'd have ore bodies called El Largo, the big one. And in Q1 last year, they were it was coming towards the end of that ore zone. Now, Campo Morado, for those who are not familiar, there's a multitude of different ore bodies there. They're all fundamentally three-dimensional and lots of different shapes and sizes. Some of them are relatively zinc-rich, some of them are relatively copper-rich, etc. So there's quite a lot of variability between the different ore zones in the mine. So they were operating in this zinc one, they're coming towards depletion of that area, and they moved into a part of the ore body which had much higher iron grades. Now the net impact of that was it had a negative impact on the comminution circuit. They weren't getting the throughput in the mill that they had expected or had been enjoying. And also it impacted downstream on recoveries. So they had poor performance from that material, mostly due to the high iron grades. They had a sort of whoopsie moment and then decided to migrate the focus of operations to another ore body to alleviate that problem. That ore body was relatively copper rich. Now, of course, the plant had been tuned or optimized to handle the high zinc material. When they switched to copper, the plant wasn't optimized for copper. And so effectively, the realization and the shift to another area was in Q1. Q2 was tune the plant to the new material and get it operating properly. To get decent enough recoveries, and that they took up the whole first half of the year, which was poor performance. Hindsight's always 20/20, but one would look at that now and say, well, that was predictable or avoidable if there had been sufficient metallurgical work done beforehand, and et cetera, and appropriate planning. As I say, illustrative of what can go wrong or why it's more reactive rather than being proactive. What do we do about it? Well, we now need to be more proactive. So there's some consulting engineers of Senko that I worked with when I was with Lundin Mining in Chile, and these guys I knew base metal flotation plants inside out. So I brought them to Campo Morado last year in October, and the outcome of that was a few things, but basically they gave us a roadmap now of how they went through the plant from one end to the other, and at every stage in the circuit, gave us, how is the plant configured, how well is it operating, its performance, etc. What are the shortcomings, what are the opportunities, So we've got a detailed roadmap now as to how to progressively improve performance at Campo Morado at the Campo Morado plant. But the one of the underlying, and I'd say fairly obvious requirements at Campo is this discipline called geometallurgy. Sometimes called mine to mill, whatever, but geometallurgy is what it needs, right? So there has to be an intimate union between an understanding of the mineralogy, the characteristics of the ore zones that you're going to be operating, mining, and how they will perform in the plant. And that marriage has to happen like daily. There has to be a very intimate, that interlinking in the planning process of the mine.
And yeah, exactly. Scheduling. You need to know what kind of stuff is going to be coming out when.
Yeah, and you know, if you've got two ore zones which are, in terms of their metallurgical characteristics, are different, then what you don't want to do is blend them and stick it in the plant, because you'll just get suboptimal performance. You can have two ore zones which actually have similar metallurgical characteristics, you know, be it mineralogy or liberation or whatever, and those can be blended. And in fact, by blending them, you get a more consistent plant performance. So being smart about it, I guess, is one way of putting it. Since I came in, we've now been through our third iteration of the mine plan for Campo Morado for this year. So we've got a plan now which I'm quite confident in, and I've been very pleased that the site management at the mine have really embraced this requirement to integrate geometallurgy into the day-to-day planning. They have their weekly meetings now on geometallurgy, and you know, they've all embraced this really well. So that's one thing. Is that's changing, and that's being much more forward-looking and proactive. We've got, you know, we're doing more metallurgical test work. That, as a requirement, is just going to continue now. We'll just always be doing more met test work it's really about no surprises, okay? It's to be as well prepared as we can be, to understand these different ore zones as well as we can before we process them. So we also took a conscious decision back in December to increase the focus on our copper ore bodies, partly because, you know, we believed that copper was going to have a strong period now. But also, we've also been able to improve our copper recovery. So we've just now commissioning some additional flotation cells. They're called sub-A cells, which we've added into the circuit, which are really an extra level of cleaning. So in fact, we're improving our copper concentrate grade by 5%. That'll really come in March. We're developing over towards these copper-rich ore bodies right now. We've reached one, and we're about to reach another. So during the latter part of February, we'll be operating in there, and in March we expect to be, you know, producing significantly more copper as a contributor to our revenue. I think to give you an idea, historically, copper concentrates have comprised something like 25% of the revenue stream, and that will increase to about 40%. And the value we get from the copper con is not just the copper, but we also get high silver tenors in our copper concentrates to the tune of 700 or 800 grams a ton. So silver is an important contributor as well to that copper concentrate revenue. So that's gonna, you know, that'll have a good positive impact on our revenues for this year. So starting in March, we'll be operating in those materials, and so we're going to have a good Q2. And the forecasts show us that actually the second half of the year is going to be even better. So, and I think overall, our EBITDA for this year for Campo is, I think the average is over the whole year is about 1.3 million dollars a month.
Great! What a great contributor.
But it's in the second half of the year, it's actually somewhat more than that. That's the average for the whole year. So it's going to be good for us, and you know, determined to have a better turnaround year for Campo. So but back to your original question, yes, it's an operation that just requires that extra level of TLC, if you like, that to make it work. But you can.
And I see mentions of ultrafine grinding or regrinding. Is that to tackle the precious metals and to try and kind of deal with the refractory nature there? Or was that just a function of some of the work you did last year?
No, only partly. It's also just about liberation and getting decent recoveries for the base metals as well. And I think with the roadmap that Ausenco have provided us now, we'll see progressive improvements on a number of fronts. We're starting at the front end. We're doing some optimizations around the grinding circuit. In fact, even upstream from there, one of the recommendations was just to do more blending in the mine and also on surface, so that the key goal, first prize, is to stabilize the mill, stabilize the plant, because it's been so reactive and things in the past, and it's operating in some respects outside of its original design. So it's really stabilize that operation, consistent plant feed, consistent plant performance. When you change ore bodies with different characteristics, be well aware of that in advance as to what that material is and how it's going to perform. Not to have to spend 2 months then reconfiguring the plant to make it work again. So smoothing everything out through better planning. I should say none of the upside, none of the opportunities or the process improvements that Ausenco have helped us to identify, none of that is factored into the plans for this year. That's all upside. The plan for this year is based on current plant configuration and performance. So there is upside there, which we may also realize some of. I just don't want to commit there until we've, done more work. But there is, and that if we were to implement all of the recommendations that Ausenco have provided to us, then that might be 18 months or 2 years of work, But there's some low-hanging fruit in there and some very interesting opportunities. The previous owners, Nearstar, actually did a lot of good metallurgical work themselves when they owned the project. One of the things they did was to test the impact of fresh water rather than using recycled plant water. With the configuration of the plant they had at the time and the reagents they were using at the time, etc., they got a 14% increase in copper recovery by using fresh water. I mean, good grief, which is massive. So we've started doing our own test work on different water qualities with the current configuration and the current reagents to see whether that opportunity is still there. Even if it's only half of that, then it's still a big thing. Nearstar actually took it to the stage where they had a water treatment plant project. But then the market took a dive, the mine was closed, and these initiatives were never picked up again when Altaley acquired the project.
Yeah.
But we're dusting them off now, and we've got some other recommendations as well, some fresh ideas from Ausenco. So I'm very encouraged now. I think we've got a lot to get our teeth into at Campo, but I think we're also going to show this year that by being diligent about it and doing the right type of planning and things, then you can provide more consistent performance and hopefully gradually build on that.
Good, thank you so much. Goodness, I've learned so much from you in this interview. One question which was kind of pending from my kind of prior research was about Roberto Guzman or Robert Guzman, who's a kind of who's listed as a he's a director. But he's a controlling shareholder with an intent to sell. What's the background there? I don't have the full picture.
No, I don't think anybody has the full picture. He has an intention to transfer that block, but he's I'm assured that he is not intending to sell it on the open market. It's a transfer.
What size is his block?
To be honest, off the top of my head, I'm not sure. He was it was something like a 20% plus shareholder, but I believe it's significantly less than that now. Apologies if I don't have that number right to hand, but it's not of that sort of level now. But I suppose the question really is he going, was he going to be selling it? Is it an overhang? Was he going to sell it on open market, which is a lot of people are concerned about? And I'm assured that he's not going to be doing that. He's going to transfer it to another entity who are in it for the long run, sort of thing. So they're not going to be sellers. The other block that we often get asked about is also the Ascendo Banco block, because that was one of the challenges the company had in terms of funding and delivering the Tahuehueto project, was the failure of that Ascendo Banco back in September 21. Ascendo had a debt facility with the company. They also were shareholders. They went into liquidation in September 21. The liquidators are KPMG in Mexico. They have been gradually selling the stock on the open market in sort of a trickle rate. I think they've just gone below now the 10% reporting threshold. So, so we no longer have visibility about how much they've got left. But through dilution and just gradual trickle sales, it's no longer really a significant sort of component. So
still, it'll be good. It'll be good to clear it out. I mean, once it's out, you've got a kind of a long-term seller out of the system, then suddenly you can.
Very important.
Reset.
Very important. Yeah, and all I can say on that is that there are a number of groups who are negotiating with the liquidator to do just that, to acquire that block. I don't know what stage that is at, but it is available, and a number of people are interested in acquiring it. Obviously, at it'd be quite an attractive price, but that would just take that out, and that would be very helpful as well. So,
well, Mike, thank you so much for your time. I really appreciate the way that you're tackling the challenge of turning these operations around. I think you said it yourself. It's very much about building credibility step by step, seeing how the rights offering goes. That $16 million. Cleaning up the capital structure. It's going to be slow and steady, I feel, for a number of months until you've got the capital structure matching the progress and the delivery that you can bring forward into the market on the kind of the technical delivery. What do you expect in terms of news flow? I mean, have you discussed it at the board level? What your strategy is for communication with the market?
Well, absolutely. I've just come back from Vancouver, so we were present at the Metal Investors Forum and also the VRIC. There's 3 events back to back in Vancouver over this period. It's a hectic 6 or 7 days.
Roundup as well.
The roundup precedes it. Yeah, we didn't do roundup this time, but your viewers will see a whole series of interviews with me and a couple of presentations at conferences there as a part of the same process of getting the story out. We've got some other press releases planned. We're just about to issue one on our work, which we haven't spoken about now, actually. But your followers will be interested to read that press release. It's going to explain all the work we've been doing on the precious metals at Campo Morado. We have run a variety of tests on different technologies to see what is possible. Just on that, what I want to do on that this year is, it's been a bit of a shotgun approach at the moment. Let's try this one and let's try that one. I want to bring all that together into sort of scoping style study that will set the path, help us decide which direction to take. The opportunity there is huge, though. If we can change our gold recovery from 15 or 20 up to 60 or 70%, then that's a big carrot. So we'll be focused on stabilizing, optimizing the base metals part of the operation right now, but we're going to continue doing that work as well on precious metals and hopefully see a bit of traction on precious metal recoveries during 2024. I think, to your previous point, the focus for us is really, look, we're a mining company, right? We're a mining company with an operating mine and almost another one. By the end of this year, we'll have 2 operating mines, both operating at nameplate, both profitable. Our current market cap is 14 million Canadian or something ridiculous. I I'm sitting in these booths at these conferences, looking at the adjacent booth, which is an exploration play without even a resource, and their market cap is $100 million. And I think there's got to be something wrong here. I don't understand. I do understand, and it's a reflection of the company's performance and a variety of factors like that. In Q2, when we deliver the 500-ton project, finally there'll be a huge sigh of relief through the market. Campo Morado is going to have a good Q2, and we'll build from there. I think we'll start to get some re-rating, in the market. People will realise that we've actually started delivering. Performance, will be improving for the rest of the year. So I think, the way I've been describing it to people, I see 2023 as really the turnaround story for us. We're going to turn this company around, deliver. We'll get some re-rating in the market. That'll have a lot of, a positive spin-offs for us. But right now, I think the company is ridiculously undervalued. So
well, there we go. I think you said it. Turnaround, deliver, re-rate. Simple as that.
Yeah. Simple as that.
Good. Well, go get them.
Go get them, yeah. Okay.
Great. Thank you very much.
Pleasure to see you. Yeah. Thanks very much, Molly.